We're going to study liquidation of a company. Liquidation of the company means it is a process by which a company is dissolved or winding up or come to an end. So it means by which the dissolution of a company is brought about and its assets realized and applied in payment of debts when all the debts are paid off and some amount remains in balance. It is paid back to the members in proportion to contribution made by them to the capital of the company. And the modes of winding up, one is either by court, that is compulsory winding up. Second one is a voluntary winding up. The voluntary winding up, it may be members or it may be creditors. Third one is winding up subject to supervision of court. And the next, what are all the order of the payment we have to settle? The orders are: number one is secured creditors, second one is cost of liquidation. The cost of liquidation is includes legal charges and liquidator remuneration and cost of winding up. Liquidator remuneration means when you are going to liquidate a company, we have to appoint the person. That person is called a liquidator. So for that person you have to pay the remuneration. That remuneration is called a liquidator's remuneration. Preferential creditors, debenture holders having floating charge on assets. Unsecured creditors, preference shareholders and equity shareholders. Now we will see what is the meaning of statement of affairs. It lists the asset and liabilities of an entity at their liquidation values. It is prepared by liquidator. So what are all the various list of settlement? The various list of settlement we are shown in the statement of affairs. Number one is assets not specifically pledged as per list A. Second one, assets specifically pledged as per list B. Third one, preferential creditors as per list C. Fourth one, debenture holders having a floating charges as per list D. And next one, unsecured creditors as per list E. Next one, preference shareholders as per list F. And next one, equity shareholders as per list G. And finally, you have to show whether it may be surplus or deficiency, that will be shown in the as per list H. So this is the prescribed form of the statement of affairs. Form 57 of the company's rule 1959 is given. First one is assets specifically pledged as per list A, and that will include balance at bank, cash in hand, marketable securities, bills receivable, trade debtors, loans and advances, unpaid calls, stock in trade, work in progress, freeholder property, land and building, leaseholder property, plant and machinery, furniture, fittings and utensils, investment other than marketable securities, livestock and other some other properties. And next one, what come under list B. List B is assets specifically pledged as per list B. It will include there are four items, that is what first one is particulars, and next one is what estimated realizable value, and what we have to do to the secured creditors, and next column deficiency, and the last column is a surplus. And you have to show in the summary of the assets, and that value are to show that amount is estimated total assets available for preferential creditors, debenture holders secured by floating charges and unsecured creditors. And you have to show in that particular column what assets we are having. That is a summary of gross assets. That will include gross realizable value of assets specifically pledged and other assets. And you have to show the gross assets. And you should be divided three columns. Shown that separate liabilities, gross liabilities and liabilities. In that gross liabilities, first you have to show assets specifically pledged as per list B, and next you have to show preferential creditors as per list C, After deducting the preferential creditors, that value is available, that is estimated balance of assets available for debenture holders secured by floating charges and unsecured creditors. And next you have to pay the debenture holders secured by floating charges as per list D. After deducting this debenture holders, you will get estimated surplus and deficiency as records debenture holders, and they have to pay the unsecured creditors as per list E. That is list E is includes trade creditors, bills payable, contingent liabilities, bills likely to be discounted. So after deducting this, that amount is useful for estimated surplus and deficiencies as records creditors. So this is a list B, C, D, E and F. And next one, finally, to issued and paid up capital, that will include preference share capital as per list G, F, and equity share capital, and finally to show the estimated surplus or deficiencies records to members, that is as per list H. And list H, we are preparing deficiency or surplus account that will include item contributing to deficiency, or we can say reducing surplus. The points are included in this heading. Number one is excess of capital and liabilities over assets. Second one is net dividend and bonus declared during the particular period. Third one is net trading losses. Fourth one, losses other than trading losses written off. Fifth one, estimated losses. The estimated losses we can find difference between book value and the estimated value. And sixth one is other items contributing to deficiency or reducing surplus. And next one, items reducing deficiency or contributing to surplus. The first one is excess of assets over capital and liabilities. Second one, net trading profits. And third one, profit and income other than trading profit. Fourth one, other items reducing deficiency. So this difference value we will get finally deficiency or surplus is shown in the statement of affairs. The statement of affairs final answer is equivalent to this deficiency or surplus as shown in the statement of affairs. And the next one is, when we see one problem, that will be clear for you. For example, A.B. Govindan is appointed as a liquidator of the company in liquidation on 1st July 2013, and the following balances are extracted from the books on that date. The balances are 8,000 shares, that is share capital, equity share capital, and debenture, bank overdraft, liabilities for purchase, provision for bad debts is given, machinery, leasehold properties, stock in trade, book debts, investment, call scenarios, cash in hand, and profit and loss also given. And you have to prepare a statement of affairs to be submitted to the meeting of the creditors. The machinery is to be valued, that is marketable value, estimated value 60,000, leasehold property 73,000, investment 4,000, stock in trade 2,000, bad debts are 2,000, double debts 4,000, and that value estimated to realize 2,000. Bank overdraft is secured for leasehold properties. So preferential creditor is also given, that is taxes and wages 1,000 rupees, and telephone rent owing is 80 rupees. Now we are going to prepare the statement of affairs. The statement of affairs is prepared. First you have to show the assets not specifically pledged as per list A. So that will include cash in hand, trade debtors, call scenarios, and marketable securities, that is investment, stock, machinery. And this values, all those values only estimated value. So the total is 1,28,000. In this one value, bank overdraft, pledged value of asset is leasehold property. So that will be shown as per list B. So asset specifically pledged as per list B. The leasehold properties The columns are estimated realizable value due to secured creditors and deficiency. Last one is surplus. We are having the leasehold value 73,000. We can settle the amount of bank over of 18,000. So fully settled, fully secured creditors. So we are having the surplus amount of 55,000. So that value is estimated. Estimated total assets available for preferential creditors, debenture holders secured by floating charges and unsecured creditors. And you have to show the particulars column summary of the assets. Gross realizable value of the assets specifically pledged is 73,000 and other asset is 1,28,000. That 1,28,000 we can take it from the assets not specifically pledged as per list A. So the gross asset is 2,00,000 rupees. And next one is how to show the gross liabilities and liabilities. First you have to show the secured creditors, that is assets specifically pledged as per list B. Have to write in gross liability column amount 18,000. Don't write in that estimated value because we already adjusted in the list B. And next you have to write a deducted from the values preferential creditors as well as to see that value is 1,000 rupees. The balance value is 1,82,000. So that 1,82,000 is available to settle the debenture holders. So write the estimated balance of assets available for debenture holders secured by floating charges and unsecured creditors. And next one is you have to settle the debenture holder secured for floating charges as well as D. The problem is given 50,000 rupees. So we are having the surplus amount. Surplus amount you write estimated surplus as regards debenture holders. Next you are going to settle the unsecured creditors as well as E. That unsecured creditors included there are two items. One is liability for purchase is 20,000 and another one is telephone rent outstanding. That is given in that adjustment 80 rupees. So the total amount 20,080 rupees. So the balance we get surplus amount. The surplus amount estimated surplus as records creditors being the difference between the gross assets and the gross liability. So we are having 1,11,920 rupees. So thank you.